How confident are you that this is going to go through the German Parliament, even if Angela Merkel does have to rely on some opposition voters?
Yeah, I'm pretty confident that it will, actually. I think there's been a lot of noise around this issue, and that's been part of the problem. They agree something in July. It's obviously taking months to ratify, and that's really one of the issues, that the mechanism of decision-taking in the Eurozone is so cumbersome. And it really dilutes the power of these measures. But I think in reality, yes, the expectation is, that my expectation certainly is that this will be approved.
There have been commentators recently saying that they've seen a kind of a sea change. We had Mohammed El-Arian from PIMCO saying, you know, suddenly now it looks like Europe's leaders have got themselves into gear. From right here, from where you were sitting, does it look like they've managed to do that? Do you feel that there's something different now?
Not really, actually. I think, you know, the Americans are clearly pushing this line. I mean, Geithner's view is that the Europeans are moving more rapidly. I think they're moving down the same line. There may be a bit more urgency, but there's still a lot to be done. Clearly, the vote for the EFSF has to go through in all of these 17 parliaments. Then we can start thinking about how you leverage that, how you make it bigger and more effective. But it's still a long and potentially difficult process.
And it doesn't actually make it any less likely that Greece is going to default, does it?
Well, in a sense, default is a strange word, because we already have on the table a swap, which is effectively a form of default, in the sense that investors are voluntarily tendering into instruments that have worse terms. So that's a coercive exchange. So we're moving down the process already where we're getting to permanent debt relief. So I think the question is, how far does that have to go? And the evidence suggests it probably has to go further.
Oh, what's happening when this cash comes out the door? Are people deciding they want to hold it, you know, under the mattress, or are they putting it in gold, or where's the money going?
We've had across the summer, obviously, a huge risk-off trade, so it's not surprising that money's left hedge funds. It's come out of funds. You've seen redemptions generally in the asset management industry. And you've seen people moving out of risk assets and into safe haven trades, into liquidity haven trades. So it's gone into treasuries, it's gone into gilts, it's gone into bunds. It was going into Swiss francs, of course, until the Swiss National Bank sort of stepped in. It was going into gold, but gold has been selling off in recent weeks because people were taking profit on things that were still in positive territory. So that's been the trade across the summer.
And the kind of volatility that we've seen in the markets, do you expect it to continue while things are as they are?
I think absolutely. And it's a strange kind of volatility. It's very correlated volatility. Risk assets trade up, they trade down. So there's this risk-on, risk-off environment, which I think has got a long way to run, actually.
What is your assessment at the moment of what's happening in the US? We're looking at all these very, very small moves when we see a little bit of positive news, but in the broader picture, how do you view it?
I think really we've got to adjust to a new reality, a new post-crisis reality where unemployment will remain very high, where growth will be very low, where the leverage in the household sector and the government sector is going to be a major overhang for the economy. And you know, part of getting to grips with that, if you like, is expectations changing so that markets stop being disappointed by the data, because I think the data is going to be weak. It doesn't necessarily mean constant recession, but I think very low growth is probably the best we can hope for in the immediate term.
Now, there are some companies with strong fundamentals who are looking at the bigger picture and looking at the longer term, and they're actually still doing quite well and growing, and some of them actually have quite a lot of money.
For sure, and there are many companies, of course, that are listed there that are tapping into demand in the emerging world, which is still very strong. So it's not the end of the world by any means, but I think the post-crisis realities are still really to be accepted by investors, that we're not going back to where we were before.
Now, in terms of investments and where you might want to put your money right now, apart from the kind of safe havens that we talked about, where else is interesting?
I think corporate bonds look very interesting, actually. Corporate bond spreads have blown out. Everything's sold off pretty much. So if you look at the corporate sector, the balance sheets are in good shape. Many of these companies are cash rich. We've got very low yields, of course, on government debt. So I think that corporate bond spread actually looks pretty attractive. Some of the emerging market currencies have sold off. And again, the interest rate differential in a low yielding world at some point will bring money back into those kind of trades.
Hanging over all of this is the crisis in Europe, isn't it?
For sure, yeah. This is still the wild card for the markets. I think what we've seen in the last few weeks is that the ECB and the central banks have got their act together, providing the swap facilities. That's taking some of the risk out of the banking sector. We're starting to see the data coming in, perhaps more in line with expectations, largely because expectations have been trashed. But what we don't know is what governments are going to do, and that's still the major concern.
There has been this idea that they've got 6 weeks to sort it out. What do you think of that idea, and will you be looking to Cannes to find some kind of magical answer?
I think that we're getting set up for something to be delivered in Cannes. Of course, that could end up being a big disappointment. But, you know, along the way, we've got two Eurozone finance minister meetings. So I think there's going to be a flow of news which is probably going to be more positive than we've seen over the summer. But this is not something that will move necessarily quickly or in a straight line.
Okay. Philip Poole from HSBC, thank you so much for joining us today.